Hello and welcome to this webinar titled Traders Toolkit Part 3. This is the third part of our review of important tools, web services, analytical data sources for trader. My name is Stanislav Bernhoff. I'm a full-time trader with over 11 years of experience in trading Forex, futures and CFDs. This webinar is provided by Exnes Company, and now we are starting our Traders Toolkit Part 3. Traditionally, before we start, let's take a quick look at the disclaimer. Information in this webinar is provided for educational purposes only and by no means can serve as a trading or investment advice. Risk of trading in financial markets can be substantial, and you will have full responsibility for any of your trading decisions. Past performance is not a guarantee of future returns. With that, we are ready to start. In previous two webinars, we were talking about screening and monitoring services, about news aggregators, about seasonal data and research, about services providing seasonal data and research. And today we are going to talk about sources also for important market data. We will talk about volume and open interest. When I'm talking about volume and open interest, I always face some kind of confusion among traders because they understand that we don't have centralized exchange for trading currencies. We have interbank market, we have numerous ECN networks, and all this data is not combined into any one centralized exchange. That's why we don't have any centralized source for volume or open interest. Yet we can analyze volume and open interest from the futures market, and I'm going to explain you some basic definitions about the futures market if you are not familiar with that. Here you see the website of www.cmegroup.com. It is Chicago Mercantile Exchange, which is the largest exchange for trading derivatives in the world. And also we have here currency futures. What is a currency future? Well, if we search here, for example, EuroFX, we can find here EuroFX futures, so-called EuroFX futures, and we get the specification of this contract. What is that? EuroFX future is a contract for delivery of certain amount of euro versus American dollar in future by the price established in the present moment. So you see that the certain amount, the exact amount of this delivery is set here in the specification. It is 125,000 euro. So if you want to get 125,000 euro in 3 months, for example in September or in December, but we don't want to survive all those fluctuations of price, we can buy future contract, because the price of future contract is established in the present moment. It is very convenient trading instrument for hedgers, for large institutional firms, for banks which would like to fix the rate, the quote right now in the moment. They don't want to speculate, they just want to buy a certain amount in 3 months or in 6 months for whatever purposes. It may be any business goals or whatever other purposes. And what is good about that? When you analyze futures market, you can watch real volume and real open interest. For example, we have information about the volume here. Information about the volume. We have real number of contracts traded within a day, and also we have information about the open interest and even time and sales. We get we even get the exact trading log, and we see how many contracts were traded in a single tick, and we see the whole history of this trading. Well, it is very convenient when we want to analyze the market, even if we trade spot Forex. Now let's go to some definitions, because it is important to proceed, because when you don't know the definitions and terms, it's very difficult to understand what I will talk about in a few minutes later. Alright, futures contract. What is a futures contract? It is a contract for delivery of certain amount of commodity in future by the recent price. With the example of Euro FX, you have seen that it is 125,000 euros. So it is a certain price for that kind of amount of euro, and you can buy a future to get this amount of euro in 3 months or 6 months. We have also expiration dates. For example, there are 4 expiration dates for currency futures. It is January, it is March, it is I believe it is September. Sorry, it is March, it is June, it is September, and it is December, of course. Well, about the volume. What is volume? It is also very important to learn what volume is. It is a number of so-called round turns, open-close transactions. If I open a trade and then I close the trade, I don't have a trade, but system registers that one value or one value of volume adds to the whole number of volume. And if I open a trade again and close this trade, we have a value of 2. And numerous thousands of contracts are traded within a day. Even millions of contracts may be traded within a day, and we have this volume, this number of volume. But open interest is something different. Open interest is a total number of contracts outstanding. In other words, if you decide to hold your position overnight, exchange will show that we have one contract of open interest. If we have 2,000 contracts or 2,000 traders holding one contract each, deciding to hold their positions overnight, the open interest would be 2,000, and so on and so forth. So the more positions we have on trading accounts which are held overnight, the more open interest we will have. It is total number of contracts outstanding. Okay, with that we are ready to proceed. Futures market and derivatives market in the United States is heavily regulated by the government, and it is good news for us as traders. And the very strict regulator called Commodity Futures Trading Commission is located at the website www.cftc.gov, and they force big market participants to make reports about their purchases in the market. It is called Commitment of Traders. It is a weekly report that indicates not only open interest and volume, but also it indicates what type of a trader holds this position, what type of a trader. And let's go to this Commitment of Traders report. This Commitment of Traders report is released to the public every Friday, 3:30 New York time, and it shows us a breakdown of each Tuesday's open interest for markets of futures markets, including currency futures as well. So in other words, for example, here we have today is Friday, July 29th. And today, in the end of the day, we'll have the information about this open interest before July 26th. So we will see what was happening in the market before July 26th. It is sort of a lag, of course, but we nevertheless can capture valuable information from those reports. Okay, we have here long format and short format. And you see here that we have agriculture, petroleum and products, natural gas and products, electricity, metals, and other. And we as a currency traders want to go to Chicago Mercantile Exchange report to the short format. Okay, let's click here the short format. And here we have some commodities, and we can scroll down and see what happens with the currencies. For example, here we have Canadian dollar. You see that the whole open interest for Canadian dollar here, Canadian dollar future, is 117,000 contracts, 117,600 contracts. Okay, so what is more importantly than that is that we have here two groups, non-commercial and commercial. Commercial trade is basically hedgers. They are going against the market. In other words, they are buying more when the market is going down, and they're selling more when the market is going up. And also we have non-commercial traders. They are speculators, so they buy more when the market is going up, when they sell more when the market is going down. It is pretty tough way to analyze this information, and that's why we don't have to do that. We have reliable services for that we can use for our convenience. And the first service that I want to introduce to your attention is www.timingcharts.com. I like this service more than, for example, barchart.com, where we also can find this information, because there is nothing here except charts and commitment of traders report and market sentiment. Nothing more than that. On barchart.com we have plenty of reports, plenty of other information. Here we have only commitment of traders reports, volume and open interest. For example, if we use EuroFX, it is EuroFX future, okay? It is EuroFX future, and we can choose more elongated period of time, for example 1 year or 3 years. 3 years. Let's choose 1 year. Well, okay, let's choose something. Let's take 2 years starting from September 14th. And I push the button COT, okay? So here in the database I use futures only. In output I use net position. So I want to know net position. And here, what do we have here? If you analyze euro, you see that we have 3 curves. One is blue, one is red, and one is green. And you see that blue curve is a delta of open interest, or in other words, difference between long and short positions for commercial traders. Green line or green curve is a delta or difference between short and long position for large traders, which are speculators. You may notice that they are always going with the price. Basically, they are going with the price. Price is going up. This curve is going higher, but it is located below the 0 point here, and it's not a trending activity yet. But it is going higher and lower with the price. As for the blue line, it is going against the price all the time, and it is easily explainable, because if you are an institutional trader, you want to purchase more when market is going down, when you have better price, and you may decide to be a seller. If the market is going higher, you decide to sell more than buy. Okay, then three curves, 3 lines here. What can we capture? What can be important here for us as traders? And the first thing that is very important, I call it the delta divergence. Well, it's not really divergence. It is a fact when delta is going to the one side, to the one direction. For example, here on the euro, you see that price is standing within some trading range, but you also see that number of short positions for large speculators is increasing. We don't know what number we will get today. In the end of the day, this number was released to the public on July 19th, and the next number will be released for July 26th. So we will get the idea of what is happening in the market. Maybe green line will go higher. We will see that market is balancing. But if it will not move, or if it will show us negative value, here we have 99,891 contract. It's pretty large difference between long and short positions. So we see that large speculators are going short. And if we see, for example, I don't know, 100,000, it will be more negative value. You will see that some large market participants accumulate in short position, and eventually market can go lower. they accumulate in short position. The example that is very visually explains what I'm talking about is visible here in November of 2015. You see that 3 weeks of delta going down. We have seen this. After November 10th. And you see that it is a pretty strong trending activity. And you can filter your trades searching only for short trades. You can accept only short trades here. You see that some large market participant pushes the market down consistently. And you may want to search only for short trades. You don't want to go long here, you want to go short. Eventually market is pushed back to the trading range by aggressive responsive activity. But before that we had 2 weeks of consistent market descending action. And it is very important. If you see that some large market participant is accumulating short position, you may want to go with this market participant. As for now, as for present moment, we have the same situation. For the euro, we have several weeks of shorts accumulating, and also we have interesting situation here on Australian dollar today. I want to show you also what was happening in March of the year of 2016. We had 3 weeks of growing delta of accumulating long positions for large speculators. This number was corrected later on, but you see that it was an indication of nice trend developing in the marketplace. In other words, it doesn't mean that you immediately want to jump in the market, but you should take into consideration this fact. What do we have now? We also have actually 3 weeks of accumulating delta. For Australian dollar, we see that now we have 33,000 contracts for large speculators. So they are accumulating this number. Before that, during July 12th, we had 16,000 contracts. And before that, we had only 4,900 contracts. So we see that something is happening in this market. And we will pay attention on what was happening during the previous week before July 26th. If this number is not going down or it is accumulating, it will be a very strong trending activity. Of course, this analysis has to be confirmed by the price. If market is located inside of the trading range, it is not an indication of very strong presence of any buyer. I would prefer if market was located somewhere near the top of the trading range. It would mean that it is ready to break. Well, as for the euro, as for the current situation with the euro, we see that market is located somewhere near the lowest point of this trading range. Well, what is more importantly than that is that British pound shows the same situation, but for the British pound we had even more negative sentiment. It stands near the lowest value of this trading range. It is not even a trading range actually. It is a trending activity. I would say that very high probability we have of market going lower, of market establishing a new low on British pound. I guess that it could be an opportunity here. Let's take a look at British pound. Okay, let's take a look at British pound and try to figure out what is happening here on the British pound. Market is standing actually in the center of a trading range. So the trade location is not very good. It is not very good, but it is fair. We cannot sell by the high price because high price was already shown by the market previously. It is 1.3478. This price is not high. It is average price. Yet we can think about establishing a short position using whatever system or strategy we can establish a short position. Well, it's not very easy, you know, to sell when the market stands within a trading range, but you should pay attention to this fact that market possibly will try to break to the downside rather than to the upside. So you will keep your attention to this fact. You will focus to this fact. Let's watch ATR. Do we have any lowest value of ATR or volatility for some period of time? Well, we don't have it yet, but if we see, for example, ATR showing the lowest volatility for some period for 2 weeks, we will say that volatility has become the lowest, and the market possibly is preparing for the break, because it cannot show lowest volatility for the very large period of time. It will eventually break to whatever direction. I would bet on the breakout to the downside, because in a strong trending activity, in a strong trending market, the breakout happens always in the direction of a trend. It is not just a price action that shows us a trend, it is also the action of big sellers and buyers. We see that big market participants are betting their money, they're trading, possibly expecting the breakout to the downside. Large speculators want to earn on this bearish trend, and so can we. It is information how to use CO2 reports or commitment of traders reports in a nutshell. It is a very big topic. I'm not naive enough to think that I will cover all important aspects in one single video, in one single webinar. Yet you can pay attention to the price in relationship to open interest, in relationship to open interest of different groups. But you see that we have a lag. Okay, we have a lag. Here we have information for July 19th, and we always have a lag about 1 week. What if we want to know what was happening during the previous day? Can we watch open interest for the previous day? We can watch open interest for the previous day, yet we don't have information about distinction between groups of traders, large speculators, commercials, and etc. To do so, we can go to the website of CME Group. It is FTP server of CME Group, where we can find history of so-called daily bulletins of CME Group. What is a daily bulletin? I will show you it very quickly. Daily bulletin. Okay, we go to daily bulletin. And for example, we want to get daily bulletin for EuroFX. Well, we have a link here. Let's follow this link. And well, daily bulletins, they include many futures contracts. They are not they don't show it for a single futures contract. Okay, for example, we want to capture something from FX market, EuroFX. EuroFX can be visible in currency futures PG07 bulletin, and we see here the PDF document. Okay. Here we have British pound, Canadian dollar, EuroFX. Okay, so we have September and December expiration here, and it is yen future. It is E-mini yen future. For EuroFX we have different expirations, including 2017, and totally we have total open interest equal to 390,000 contracts or so. So change of open interest was negative. So we see the negative change in open interest. It is 7,714 contracts. So in other words, if you want to see what was happening during the previous day, if you see that the day was trending, for example, I don't know, day was trending. Also you want to see whether it was liquidation break, or possibly some big market participant or big business has entered the market. You may want to know it. Well, for example, let's take British pound. We want to know what was happening during July 14th. Was it just a liquidation rally, liquidation break, or did we have any significant volume stepping in? Well, to do so, to analyze this, we can analyze daily bulletin for July 14th. To do so, we go to the history, and we search here for July 14th. Here it is. It is downloading. So it will take possibly a couple of seconds, several seconds to download this report. Okay, while it is downloading, let's once again get back to the chart of British pound. So you see that volatility is going lower. Volatility is very low. It is very hard to earn in this market for momentum traders. Yet we want to know what was happening during July 14th. We extract section 07 currency futures. We extract this PDF document, and we see that we had open interest with negative change for 611 contracts. Well, it is not an accumulation. Well, it's not a massive liquidation, of course, because the total number of contracts is 236,000 or so. So it's not a big deal. I would say that we had possibly no changes. Nothing changes really. Nothing changes. So at least we are aware that this movement is not a big deal. So we had no market participants entering the market here. Possibly it is an indication of manipulative market. Well, really nothing changes. Let's watch the volume also. Let's watch the volume. What about the volume? Total volume for the contract was 196,000 contracts. Well, it is pretty large volume, but I would say that it's not a record, but it is pretty large volume. It's pretty large volume. In other words, we had significant intraday activity here, but really not very much of those positions, of those trades were held overnight for the next day, and this number was decreased for 600 contracts. So we definitely know that no big time frame was involved in buying here. Okay, let's go once again through services that we're talking about so far in this webinar. First of all, it is cftc.gov. It is the official website of US Commodity Futures Trading Commission. And here we are interested in weekly reports, in commitment of traders reports. Well, you might want to dig deeper and explore so-called disaggregated commitment of traders report. They provide more detailed information. Well, I am not analyzing this information in such detailed mode, but you might want to do that. It requires some expertise. You should learn about this topic a little bit more. Okay, so also we are talking about timeandcharts.com, which visualizes this information on a price chart, compares it with a price chart. It is very useful. Also we have cmegroup.com, where we can capture daily bulletins, and history of daily bulletins. It is FTP server of the exchange, available by the link that you see here on your screen. Okay, we are finishing this webinar. I hope it was useful for you. It has given you some important ideas, important information. Well, of course, it is not a complete review, because it requires the whole educational course, separate educational course, to learn about all those tools. But at least you can select something for your trading. You can learn more, you can dig deeper. So now you know something about important valuable services for traders. There are much more services and software that we were not talking about. I hope that we will also talk about them in next webinars. Thank you for your attention. This webinar was prepared by Stanislav Bernhoff and Exness Company. See you later. Good luck, and see you in the next videos.